Hello and welcome to the Pantheon Resources AGM webinar. I'm Jay Cheatham. I'm the CEO of Pantheon Resources. Today you'll hear from our technical director, Bob Rosenthal, and one of our consulting geologists, Dr. Ed Duncan. We also have a special guest with us today, our newest member of the board, David Hobbs, who I invited to participate in this webinar. First, I would like to acknowledge that we're aware of all the turbulence that's gone on in the last 6 months, especially in Pantheon's share price. And we understand the frustration that shareholders feel. During today's webinar, we'll talk about our lessons learned by Pantheon management. And also, I want to dispel some of the disinformation that's in the marketplace about Pantheon. Bob and Ed are going to talk about some of the achievements of the last year and talk about Alkaid number 2. And then we'll talk about our path forward and value accretion for Pantheon. So, Jerry, if you could put up the map, please. And please, everyone, look at the disclaimer. So, this is an updated version of the map we normally show of the North Slope of Alaska. Thanks to Jerry Nichols, he's made it an interactive map when you go on our website. It has a lot of data on it. To the north is Prudhoe Bay, the original discovery for the North Slope. Lying about 20 miles south of that is the Pantheon acreage. In the sort of turquoise color is the 153,000 acres that we have, including our 2 units, Alkaid and Talitha. And we're also in the process of beginning the process for a unit on Theta West. Outlined in turquoise is the approximately 40,000 acres that we were the high bidders on in this past year's lease sale and should be awarded soon. As many of you know, I joined Atlantic Richfield Company because of their announcement of the discovery of Prudhoe Bay. That was back in 1969. And the original DeGolyer and McNaughton independent expert report for Prudhoe Bay had the oil in place number at 10 billion barrels and the recoverable number at 3 billion barrels. Today, the oil in place number at Prudhoe is in excess of 30 billion and the recoverable is in excess of 16 billion. 2 things to take away from that. First, big, good fields get bigger and better. But secondly, normally, the initial independent expert report, or CPR report, is very conservative. Now, it's not a direct comparison, but our oil in place numbers are circa 20 billion barrels, and our recoverable resource is a little bit in excess of 2 billion barrels. And we sit right along, as you can see, the Dalton Highway and the Trans-Alaska Pipeline, which is terribly underutilized. If we go to the west, way out west, is the Willow project by ConocoPhillips in the Naval Petroleum Reserve, Alaska. That means federal land. And that is a 600 million barrel of oil equivalent development with a development cost of $8 billion to get to first oil. That was recently approved by the administration just 2 weeks ago. That is not only good for Alaska and the U.S., but I believe it's good for the world. If we go down to the south, there's a well, the Hickory number 1 well, that is only 500 feet below our southern lease line. And that well spudded a couple of weeks ago as well. That well will test the SMD, the slope fan system, the basin floor fans, and the Capard. And we look forward to 80AD having success there. Before I turn it over to David, I also want to let everyone know that we've added Tony Bielman to our technical team. Now, Tony's a petroleum engineer with over 40 years of experience. He specializes in executing horizontal drilling and completions in these horizontal laterals. I've known David since his Sarah days. He will help our company in communications, strategy, partnering, and David also has just a lot of good common sense. So over to you, David.
Thank you, Jay, and good afternoon to everyone here on this webinar. I'm David Hobbs, a petroleum engineer and energy strategist, and I don't want to spend too long talking about myself, as you can read the specifics of my background on LinkedIn, and in the big marker profile there is a link to my LinkedIn profile. But the highlights are that I've spent nearly 20 years in operational and business development and commercial roles in the upstream oil industry, and then the next 20 years in policy and business strategy advisory roles at CIRA, which is now part of S&P Global, and then at Capsarc in Saudi Arabia. And then between sailing across the Atlantic and around the Caribbean, been doing some consulting and structuring work in between. For the avoidance of doubt, I previously had an online presence as Telemachus, and I mention that because I'm a firm believer in transparency, and that will allow people to put the two together. Now to the present day. The question I've been asked most often in the past couple of weeks is, why would I join the team after the beating the company's taken on Twitter and in the markets during the past several months? First, let me say I've got the utmost respect for what's been achieved to date in discovering and starting to appraise a truly world-scale resource, measuring more than 20 billion barrels in the ground and an expectation of recovering at least 10% of that. There's also been some questioning of the integrity and competence of the team. I've got no doubts on either count. It doesn't mean there have been no missteps or that there's no need to increase the organizational capacity to better meet the challenges ahead. But as I say, I have no doubts as to the integrity and competence of the management team of Pantheon. If you look at a share price chart over the past couple of years, I think we've seen this picture before. Go back to the spring of 2021, and the share price was pretty similar to today's. Back then, the share price had fallen out of bed after what was an inclusive test of the Kuparic zone and running out of time to test the main pay zones in the Talitha well. However, once the market had digested the full well results and understood the forward plan, it recovered. We hadn't then drilled the up-dip well at Theta West that confirmed the giant scale of the basin floor fans, nor had we drilled and flowed the Alkaid 2 appraisal well, which we will undoubtedly discuss further during this webinar. Back then, the market was focused on how much money would be needed to appraise and develop the resource to a point at which it could either be sold in whole or in part, or be brought into production by the company. And just as I was back in the spring of 2021, I am today confident that the quality of the resource base and the recognition by management to build the team and recast elements of its strategy to move to the next stage, and that will underpin a recovery in the company's fortunes. For example, you heard earlier that Tony Bielman had come on board to add his experience in engineering and operations as we graduate from proving up in-place volumes to establishing the most economically robust means of recovering those resources and turning them into revenue and value. I'm confident that in the coming weeks and months, the additional actions necessary to meet investors' concerns and demonstrate that management understand the challenges and have a plan to implement a successful strategy will become clear. Perhaps there's no more tangible demonstration of that confidence than that my not insubstantial holding is now public and restricted through director dealing rules. If I had any doubts about the outlook for shareholders, I would hardly have accepted the board's invitation to join the team and place myself under those restrictions. Now, back to Jay.
Thank you, David. Excuse me. Jerry, on to the next slide, please. So we have listened to the feedback from shareholders, and we definitely have some lessons learned. We know we need to improve communication to shareholders. We endeavor to do that. We recognize that we are a small team and that we need depth to execute our forward plan. Keys to that are bringing in a partner or a farm-in that will help strengthen the team. And as you know, we've added both David and Tony to that team. We need to tighten our cost control. Clearly, we took our eye off of the ball with our permanent facilities, the expansion of which we undertook while we were drilling the Theta West well. And we endeavor to do much, much better on tightening our cost control in the future. Thirdly, we know we need to reduce the execution risk vulnerability that was demonstrated in our inability to get timely equipment on site, especially at the Alkaid number 2 well. I call this, we have no purchasing power. To that end, we're looking to partner and to have that power through that partner. Secondly, we're working on a plan to partner with some service providers on the North Slope to have availability to a coiled tubing unit and a workover rig. Next slide, please, Jerry. There have been a lot of misperceptions and market disinformation, and I just want to talk through some of those. The top box, questionable resource claims. We even heard the word fraudulent used over and over again. But what's the reality? Well, if it's fraudulent, then SLB, Baker Hughes AHS, Lee Keeling, Netherland and Sewell, Wood MacKenzie are all part of that. Plus the state has awarded us 2 units, which recognizes the underlying hydrocarbon accumulation. This is either an uninformed or deliberately distorted view in the market. Second block, Halliburton relinquished 25% of the entire project for no value. The reality is Halliburton had a 25% interest in 6 of over 60 lease blocks. That was about 2.5% of the project working interest. We later dropped 2 of those blocks. Halliburton's a service provider. They like to receive money, not pay money for operations. And they no longer had a unit that would compete with their customers by taking working interest. Plus, they were the partner of record for the oil search project. So what did they give up? They gave up 2.5% project working interest to avoid payment for back costs and a release from future liabilities. Thirdly, Alkaid number 2 flow condemns Pantheon acreage. Bob and Ed will go through this in detail, but just let me say that there is extreme variability within reservoirs, much less across different reservoirs in a more than 10-mile resource base. So you'll see that later. The fourth one was that the NGLs and condensates on the North Slope are worthless. Well, that is not true because all of the liquids that are not burned and produced on the North Slope are blended and sold as Alaskan North Slope crude at Valdez. And ANS normally trades at a premium to Brent. One last item before I turn it over to Bob. On Alkaid 2, we're getting close to having the data we need to achieve our objectives of understanding the EURs. And that's as the production starts to level off. Just a reminder, this was always a test well, not not a production well. And to be a good citizen, we do not want to flare excessive volumes of gas, NGLs, and condensates. Plus, we will eventually need that vertical wellbore to test the shelf margin deltaic above that lateral. As a result of that, we may not ask for an extension of our flaring permit from the state of Alaska. Now, over to you, Bob.
Hi, I'm Bob Rosenthal. I'm the technical director of Pantheon Resources. And again, like everyone else, I would like to say, I appreciate that you are attending this webinar. Look, I'd like to spend a few minutes going on describing where we're at and what we've done this year, and what are we doing to move forward. So first, I'd like to point out that we drilled the Talitha A well back in 2021. And as David pointed out, we were unable to test the main objectives in the Talitha A well in that year. In the winter of 2022, we began testing the Talitha A well, and we spudded the Theta West well, which was an appraisal well of the Talitha well, 10.5-mile step out. While we were testing Talitha A, we were drilling Theta West. We tested multiple zones in Talitha, and they were light oil bearing. We then went over to the Theta West well and tested the lower basin floor fan, 1,500 feet up dip. And like I said, 10.5 miles from Talitha A, and we found light oil in the lower basin floor fan, which conclusively showed that we had a huge accumulation of light oil in the Theta West lower basin floor fan. Now, as Jay's alluded to, we only found out a couple of days ago that Wood Mac has published it as being the 4th largest discovery in the world for 2022. And back in 2021, IHS said it could be one of the top discoveries of that year. So, that's where we stand there. We believe we have 17 billion barrels of oil in place in that, and we're evaluating it. Also, immediately following the Theta West discovery, we were planning and executing and drilling the Alkaid 2 pilot hole, and then the Alkaid 2 horizontal well. And as Jay's alluded, we are finishing up the long-term production testing of that well. At the end of all this is we found out the sort of like earlier or late last year, based on all the results that we've had and announced, that 88 Energy is announced that they were going to drill, and they have spudded the Hickory number 1, which is 500 feet south of our acreage, and they are testing the discoveries that we already have, which is in the SMD, slope fan, basin floor fan, and they're going to go down and test the Kaparic as well. These numbers that I've been talking about are oil in place numbers, and we have a resource of about 2 billion barrels. Pantheon, over a period of 4 years, has found 23 billion barrels oil in place, over 2 billion barrels of recoverable resource, all of which has been tested, and that is at about a 10-cent a barrel finding cost, which is pretty good. More than pretty good. That's very good. But how are we moving forward? I think David very eloquently said, what we need to do is move from resource to recoverable resource, recoverable reserves. At the end of the Theta West testing program, we engaged with Schlumberger to put together their dynamic and beginning of a static model and the beginning of a dynamic model, which would discuss how hydrocarbons would move through each one of our reservoirs. And they came up with an oil in place of 17.8 billion barrels across our number of reservoirs that we have. What we are doing today with them is moving forward on the dynamic model so we get a recoverable resource. That's really important to understand. So they are putting together the dynamic model. We'll have a recoverable resource, and we'll update the static models that we have, which will include the new leases that we've acquired in the last lease sale. So we're actually engaging with one of the top service companies in the world to help us optimize development scenarios through all our reservoirs. Now, this is important for a number of reasons. Primary, it's for us to understand how we're going to move forward and develop these different reservoirs. It's to get to a recoverable resource, but it's going to be very important in our farm out, our partner meetings. This is the information that they are going to be looking at in detail to make a decision about our acreage. Now, we've also engaged with Schlumberger to provide the data room. They've actually, said that was something they volunteered they could do. And they said they would be quite happy to present the work that they had done to potential farminees and partners. At the same time, we've engaged with Netherlands Sewell to get an independent experts report, the first one we have on the Theta West resource. And because we're working with Schlumberger at this time, we'll also have a recoverable resource with that and have an IER on that Theta West discovery. We're also going to update the Alkaid resource based on the Alkaid 2 result and looking to get an Alkaid reserve. Again, having all this together is important to us in terms of, finding a partner and, finding potential farminee. But also important to us, we see them as part of our team in moving forward to, optimize our drilling technology or drilling and completion work, optimizing location of our next wells, and moving forward in evaluating these different resources and getting it to a recoverable reserve. I think I'll turn it over to Ed Duncan, and Ed's going to take you through a few of the findings that we saw at Alkaid 2 and talk about some of the implications of what it all means for the rest of our reservoirs.
Thank you, Bob. This is Ed Duncan. I appreciate your time and attention. As always, it's a pleasure to present and speak to you through these virtual meetings, these webinars. We're going to reflect back on Alkaid 2 for a bit. Much of this you perhaps have already seen in previous webinars, previous discussions. Let's just hit a couple of the high points here. The slide in front of you has two important bits of information. It's a vertical looking well profile, but that's actually the lateral, the toe at the bottom, the heel of the lateral at the top of the log traces on both the E-size process well log data and the Halliburton mud log. We see 5,213 feet net oil pay across the horizontal. Continuous oil from heel to toe. Effective porosity is ranging from 8 to 18%, with an average of 12. Importantly, This well has de-risked the eastern extension of the greater Alkaid structure. You probably have heard us talk about the Theta block in the past. Well, that's what we're talking about here, the eastern extension of the Alkaid. Oil from heel to toe. We penetrated oil-bearing reservoir in the pilot hole below the zone that we went in the lateral. This was a target, a stated target for the pilot hole to test to see the extent of oil beneath the primary zone of interest. We've proven that oil bearing to TD. Importantly, we penetrated the oil bearing extension of the regional Shelf Margin Deltaic play. This is a play that was really focused and centered initially on the Theta A well. We recognized it in the Alkaid 1 well. We tested it here in the Alkaid 2 well. And we'll see in the next slide, Jerry, if you can advance, you'll see the Shelf Margin oil pay zone on the left-hand side, the Baker Hughes AHS volatiles panel. Lots of colors on this, so we won't go through those in detail, but the 3 columns in the middle with the green shaded areas, those are the oil pay zones. The SMD, Shelf Margin Deltaic play at the top, and the Alkaid zone of interest, oil pay zone in the lower section. Focus also on the very left-hand side of that AHS volatiles panel. The red dashed lines from top to bottom are the samples taken by any measure comprehensive. These data and all of the geochemistry we've run, all of the test results we've run, are being incorporated by SLB, formerly known as Schlumberger, to update the static and dynamic models that Bob referred to in the previous presentation. Schlumberger is also critically reviewing the volume of gas that we're producing. And they've presented a possible scenario to explain the volume of gas, as perhaps we have encountered a gas cap, a small gas cap in the Alkaid structure. What's interesting about this conclusion or this scenario is that we have 3 independent data sets collected while drilling that illustrate unequivocally that we were in oil from heel to toe while drilling. What we believe we may have done is the stimulation may have fracked up into the gas cap that lies just a few tens of feet above the oil zone. We're going to investigate this further. We begin the second phase of the SLB work in a couple of weeks. So this will be a headline topic for the next phase of the evaluation as we update the models and improve the accuracy and fidelity of those models. Next slide, please. We classify our projects and our reservoirs by play type. By play type is defined by the reservoir bearing depositional system, for example, deltaic system versus the basin floor fan system. 2 distinctly different reservoir systems that have different critical controls on reservoir distribution and the resulting nature of the plays themselves. The results at Alkaid 2 are going to apply to Alkaid. It's a separate play from the Shelf Margin Deltaic, the basin floor fan, and the slope fan systems. We can't take the results of Alkaid 2 at reservoir level and transfer those definitively across to the basin floor fan, the SMD, or the slope fan system. That is just not going to happen. It would be an incorrect thing to do. We see significant variation in reservoirs, actually even within the same plays. We see different Different reservoir character based on depth of burial, different reservoir character based on grain size. All of these things we understand. We've collected data, we've reviewed that data, it's incorporated into the model now, and it's going to be continued to be incorporated into the model going forward with SLB. I think probably the highlight on this slide is really an important point for us, and that's the WH Iron quote from June of 22. There's zero chance that the result at Alkaid is going to reduce their enthusiasm for the main prize of lower basin floor fan of Theta West structure. And this is a quote that came out before the Wood Mac citation of being the 4th largest discovery globally in 2022. That's the grand prize. All of this can be great, but that lower basin floor fan system is truly massive. Next slide. Speaking to variation within the same depositional system, the same play type, Talitha A and the Theta West 1 well both penetrated the exact stratigraphic succession cyclic reservoir deposition of the basin floor fan system, but separated by 16 kilometers, 10 plus miles. Talitha A, the deepest, greatest depth of burial. Theta West, 1,500 feet shallower. Same reservoir system, penetrated at different depths of burial. From Talitha A to Theta West, and that's 16 kilometers. That's a big step out, as we've discussed in the past. A 60% improvement of porosity. That's exceptional. Now, when we look at our acreage further to the north and west, the new acreage that we've picked up, we can go another 1,000 feet up dip. That's going to manifest itself as yet even continued improvement in the porosity of the Theta West fan reservoirs. The dash profile that you see here is our predicted histogram, if you will, for porosity in an up dip position from the Theta West #1 well. We know the reservoirs are full of oil, high 30s API, sweet, light, crude. A fantastic result, and a lot of running room yet to come for the Theta West fan. With that, I want to pass it to David for a review of key takeaways.
Thanks very much, Ed. And I'm pleased that I have had the opportunity to now have a look at the technical data, discuss with the technical team, and present some preliminary conclusions to you on the takeaways from the Alkaid 2 well and the several months of testing, coming at it on the outside with a fresh pair of eyes. The first thing to say is that the reservoir quality, as demonstrated by the total fluids rate, is better than pre-drill expectations. The well flowed more than 1,000 barrels a day of total liquids, notwithstanding that the gas flows would have restricted the amount of liquid that could flow through the pore space. So in the absence of such large gas flows, the liquids rate may well have been better, but that comfortably exceeds the pre-drill guidance of 150 barrels per day per 1,000 foot of lateral. If you recall, one of the pre-well concerns raised by some people, some commentators on Pantheon, was that there wouldn't be enough gas. There was an estimate of around 600 cubic feet per barrel. There was a concern that there wouldn't be enough energy in the system to meet even a 10% primary recovery factor. In truth, what we've seen, and gas is much more compressible than water or oil, so it provides the energy to maintain flow without reservoir pressure dropping as much. And so in simple terms, gas volumes that we've seen and the reservoir being as close to the bubble point is good news. The flow test tells us there's plenty of energy in the system, and that may well translate into higher primary recovery factors. Of course, if this was a thin reservoir, the presence of the gas would be a problem because it would be difficult to get away from the gas. But this reservoir is very thick. There's plenty of space to separate future wells from the problem. Whether the gas flows are from a thin gas cap or they reflect how close the reservoir pressure is to the bubble point at the top of the reservoir, the fix is the same. We'll complete future wells further down the oil leg where the differential between the bubble point pressure and the reservoir pressure is much greater, and that leaves a much wider margin for production without gas breakout and will allow higher flows of pipeline quality liquids in subsequent wells. My key takeaway really is that any technical reading of the data suggests that the likelihood of commercial viability of the Alkaid project is higher today than it was prior to the well. We've gathered enough data to address some of the risks identified pre-well, and the deliverability of the reservoir has been shown to meet or exceed those pre-well expectations and comfortably exceed what's required to underpin commercial development. And I would finish by saying that in addition to the potential of the Shelf Margin Deltaic above it, the location that this well is drilled from is highly likely to be a key center for commercial oil and pipeline fluid flows going forward, because the resource that sits under it can be accessed with horizontal wells and potentially in due course even commingled, so that we see higher rates in aggregate per well than even the Alkaid lateral itself has demonstrated as being achievable. With that, back to Bob.
Thanks, David. I just want to finish some of the technical talk on just this one slide. What you see here is the hydrocarbons found from 2015 to 2021. This is the recoverable resource numbers. They include oil and gas. Those are the total volumes found over that period of time. On the right, you see what I would say we found over the last couple of years. That's all oil. So that's the Pantheon, the little brown box there is the Pantheon resource that we've actually found. If you just look at compared to 2021, so of all the thousands of wells drilled in 2021, we've found approximately half the same resource that they found in that year. Again, there are some key bullet points that came in with the Wood Mac publication. And I think, highlighting it, there's, again, the fourth biggest global discovery in 2022, probably the largest onshore discovery in 2022. And as you see in there, Theta West pushes our resource estimate past 40 billion barrels oil equivalent threshold for Alaska. This is a lot of oil that we found. And again, we're very focused on moving that oil in place to really getting it to recoverable resource and to recoverable reserves.
Thank you, Bob, Ed, and David. And of course, that's what we all want. We want to move recoverable resource to recoverable reserves. So Jerry, next slide. This is our final slide. So this is our value accretion story. There are a couple of metrics on this slide. In the upper right hand, it's the $3.10 a barrel that Oil Search paid for their entry into their Horseshoe Pica project back in November of 2017. And on the left-hand bottom is Pantheon, valued at about 11 cents a barrel of resource. So the lower left block is what we've accomplished to date, and Bob talked about that. In the middle, 2023, that's what's underway. The two independent expert reports or CPR reports by Nolan and Sewell, the SLB work that Bob talked to you about, the multi-million cell static and dynamic model, the data room, etc. And for 2023, it's what we have planned, what is on our to-do list. Test a new Alkaid well, a new Theta West well, a new Talitha well, and test the SMD at Alkaid. So people might think that we're a long way from reaching that summit, but we're not. We're well more than halfway up that summit. Now, yes, there's a lot still to do, and we recognize as a small team that we'll need to add to that team in the future to reach that summit. But we're a long way toward that summit. So I think it's time for the Q&As now.
Thank you, Jay. As always, Mr. Darkon has very kindly curated a Q&A list for us. I'll endeavour to go through those as best I can. I do think that many of the questions have been answered throughout the course of the presentation. Nevertheless, we'll get stuck into it straight away. And Jay, the first question I think you can address while you're there, it's on the SMD. There's a question concerning the method of flow testing that, given it will be in the Alkaid number 1 well or the Alkaid number 2 wellbore, how would you go about undertaking that SMD flow test in that wellbore, Jay?
Well, first of all, we would test both of them in the vertical section. Alkaid number 1 obviously was a vertical well, so if we went there, and that would be an ice road test and more expensive, that would be in the vertical section. But also in the vertical section in the Alkaid number 2, we would come uphole from the horizontal, which is in the Alkaid anomaly, up into the upper portion right above it, and test the vertical SMD at that location. And I just point out that, Justin, that the SMD there was actually better than we had anticipated. And so it was a surprise on the upside as we were drilling through it.
Thanks, Jay. And so, Jay, if that was the case on drilling through, why wouldn't you have flow tested the SMD first and then gone down and perhaps done the Alkaid section second in that order? Is there a reason for that?
Well, of course, you test from the bottom up, Justin, because you have to plug off the lower zones as you come up the hole to test the upper zone. So you test from lowest to shallowest.
Gotcha. And Jay, while on the topic, another question here on Alkaid in particular, given the production of the NGLs and the condensate, which of course we're not currently stripping out. There's a question here asking whether or not there's a financial case to purchase the equipment necessary to extract those NGLs and condensates and to allow them to be sold. Can you answer that, please?
Well, everyone must remember that Alkaid 2 is actually a test well, and it's not a long-term production well. And the liquids production was a bit of a surprise. So in advance, we didn't know how much NGLs and condensates we would produce. And since it is a test well, there probably is not an economic case to spend the dollars required to put in a refrigeration unit, plus the time that's required to, one, permit it, secure the facilities, move them up to the North Slope and install them. So it's not economically feasible until we probably go into full field production.
And Jay, I guess from a practical perspective too, given we only have the ability to flare gas for certain periods of time, we could
Right.
only,
Yeah, exactly. It's a test well. It's not.
Yeah.
It's not a long-term production well.
First one is to you, Jay, and it's clear from the presentation that we've just heard that Pantheon has enormous volumes of oil in place. And you touched upon it, I think, on that last slide there, but how do we go about moving those large oil in place numbers to value for our shareholders?
Well, I think Bob answered a lot of that, and it's the data room, bringing in a partner that solidifies value, and just executing better and executing on our future to-do list of the 3 new wells and the testing of the Shelf Margin Deltaic at the location at the Alkaid number 2 well. Those will move that needle way up toward the top of that summit.
Yeah, Jay,
but we understand execution is a key in that.
Understood. So the first point, bringing in a partner, we've said this before. I mean, we have opened up a data room before and ultimately didn't come to culminate a transaction for a farm-in. What's different today here in March 2023 than in previous years when we opened up the data room?
Well, I think I'm going to jump in. I would say the big difference is, we've tested oil at Talitha. We've tested oil at Theta West. We're flowing oil at Alkaid and selling it, moving it down the Dalton Highway and selling the oil. Those are massive differences. I would say another huge key difference is all the work that's been done by Schlumberger over the last 5 or 6 months. Again, started that in June, and the ongoing work that they're doing now, and having these dynamic models, actually, the 3D visualization of the subsurface, having those models together with all, which is the input of all our data, is completely different than where we were in December of 2021. Massive difference.
Yeah. And Bob, actually, it's not only having tested, for example, Theta West, we hadn't even drilled those wells the last time we had the data room open. So, yeah, totally. It is a massive difference. So just on the subject of operations, it's well known that we experienced some significant operational delays this season. What can we do to avoid those or minimize the risk of those going forwards, Bob?
Well, probably the biggest problem we had this year was being able to access workover rigs. And again, we've talked about having one on standby, and it moved out, and it had a catastrophic failure when it was doing other work, but we had problems, post that, waiting on workover rigs or waiting on coil tubing. And that was one of the major causes of our delays. What we're trying to do is actually possibly partner with other people or partner with the service providers in such a way that we would be kind of first online for getting this coil tubing rig or having the workover rig. So we've recognized that is one of those points where you have the biggest chance of having a delay, and we're focused on solving that. And there are a number of ways of doing that. That could be, again, working with other companies to possibly buy a rig or have one that would be on call, or having a partnership with one of the service providers and providing us with a rig.
Yeah, thanks, Bob. And a question that's come back from a number of investors is, why didn't we have a spare rig parked to the side just in case it was required?
No, absolutely none available. Period.
Yeah. Okay.
And it's hugely expensive to do that. It is hugely expensive.
Yeah. And actually, just on that topic, we touched upon it previously. there was a rig that we thought we may have been able to get, but we crossed over this period from summer to winter. Can you just explain what the difference is between the summer season and the winter season in terms of requirements for drilling equipment?
Well, the main difference is the rig needs to be winterized properly for winter operations. And this particular rig, the state had deemed that it was not winterized properly, and therefore we could not use it during that period. You know, we asked the state for a waiver, and they turned us down. So that was not an option for us.
Understood. Thank you, Jay. Jay, you mentioned a strengthening of the team earlier on, and we've heard from David today, and you also mentioned Tony Bielman. How important is it to continue to strengthen our team or to supplement our team, perhaps with advisors or consultants going forward?
Well, can I jump in there and answer that? I think we've done that by what I would say is bringing Schlumberger into what I would call our team. As we are moving forward with the work program, the completion design, everything, we've engaged with Schlumberger, which is a huge service provider, to help us. And so they're just not putting out this dynamic model and saying, here you go. They're coming up with, to work with us to how are we going to develop, these fields? How are we going to drill the wells? Where are we going to place the wells? So it's very much considered part of our team now.
Yeah. Thanks, Bob. And of course, we're using extremely high quality names as partners too. And on that topic, you mentioned Schlumberger to help us with our modelling. We've also mentioned earlier in the presentation we've contracted Netherland and Sewell to do some resource statements for independent expert reports for us. Bob, can you explain the difference between what Schlumberger will be doing and what Netherland and Sewell will be doing?
The independent expert, or Netherland Sewell, is coming in, and they will be looking at our data set, and they have a very strict guideline on assessing resource or reserves, and those numbers have a very strict meaning behind it. We're working with Schlumberger to put together the fundamentals, i.e. the reservoir models, and put all the data together and help produce all the maps that then Netherland and Sewell will come out and look at to evaluate to get to their analysis.
Thank you, Bob. Look, a question for Ed, just moving across to the Alkaid result. Ed, what is the estimated size of the gas cap that we believe we've encountered at Alkaid 2 versus the total reservoir size? How big is it?
Yeah, aerially, it's quite small, and volumetrically, it depends on ultimately how thick the gas cap is, if it exists at all. Most likely less than 5% of the gross rock volume.
Okay, so I've got a question here. I might pass this one over to David. Given that Alkaid's only less than 4% of Pantheon's resource base, how does the outcome of that well, in your view, relate to the stock market reaction that we've seen?
Well, Justin, I think there are two parts to it. The first, as I mentioned earlier, the review of the data actually underpins the quality of the reservoir and the resource. So the first thing is looking from the inside. That's the result has not been as negative as it's been perceived. But I think that the market reaction has been more to do with a mismatch between expectations of outcome and the actual outcome, and the presence of gas in larger volumes and the potential of a gas cap has obscured a simple understanding which would have allowed people simply to say pre-well expectations were guided as 150 barrels per 1,000 foot, and instead seen, well, it requires more nuance than that. And in a market that was primed to be disappointed, the reaction has understandably been negative. The important thing will be to find a way of demonstrating clearly the deliverability of the reservoir and its commerciality. And I believe that the Netherland and Sewell work, when they review the data as an independent expert, taking no guidance from Pantheon as to how to interpret, that's part of the underpinning of an independent expert's report, their confirmation that the data does indeed support the underlying commerciality because of the deliverability of the reservoir that was demonstrated. I believe that will help rebuild some confidence in the value of that resource and indeed in management's understanding of the totality of the resource base, so that people can look across and see that they can trust what's being said about Theta West, the SMD, the slope fan systems, as well as on Alkaid.
Okay, look, great answer. Thanks, David. And actually, you mentioned some other reservoirs there, and a question here for you, Bob, a bit further down the list. It concerns the SMD, and we've mentioned that there's the opportunity to test the SMD on the Alkaid unit. And can you explain the pros and cons, essentially, of testing the SMD at Alkaid 1 versus the Alkaid 2 wellbore?
Well, Alkaid 1, or I'd say the positive, take the positive first, is Alkaid 2. We've got, we've got a great vertical hole there. We got a good cement job. We have, good logs, good VAS that indicates that we have good reservoir with oil in it. Great place to test it. We're on a gravel pad, and we're right next to the road, which means we can do that at any part. We can do that during the summer. We don't have to build an ice road. We don't have to build an ice pad. It's much cheaper, and it'll give us a good shot of testing the Shelf Margin Deltaic.
Yeah, and Bob, for the non-technical people out there, given it could be in the same wellbore, in the Alkaid 2 wellbore, is it independent of the Alkaid 2 horizon, or would the results that we've seen in Alkaid 2 in any way impact an SMD test in that wellbore?
No, again, separate reservoir, separate test.
Brilliant. Thank you very much, Bob. Just while I have you here, Bob, stay there. I have another question, and it's this question of chances of success or probabilities of success. And somebody's noted that other companies out there publish probabilities of success relating to their various horizons. Can you give us your interpretation of probabilities of success in relation to the reservoirs on Pantheon?
We have flow tested oil at the lower basin floor fan, and that there's not a probability we're going to do it. We've done it. We've tested oil in the slope fan. It's not a probability if that's going to happen. It's happened. We've tested, we're flow testing oil out of the Alkaid anomaly. It actually is moving hydrocarbons. It's not a probability of moving the hydrocarbons. Our goal now is to move to commerciality. Commerciality has a lot of functions associated with it. It has oil price. How much is it going to cost to drill wells? What kind of facilities you need to put in place? All of that. And we, talking about what is our probability of success of, testing oil at Theta West is, well, it's 1, because we've done it. So now it's about putting together the program to move these numbers to recoverable resource to commercial reserves.
We have a question here on the cash position or Pantheon's present funding position. Just with respect to that, at the end of December, we reported that we had about $16 million cash in the bank. And obviously, there's been some further expenditure on that, most notably on the Alkaid number 2 well. Our latest cash position will be disclosed when we publish our interim results at the end of this month. so not too far away. But of course, as is always the case, additional capital is going to be required for the next stages of our development, be that drilling, leasing, G&G, or general corporate purposes. And the board, as we always do, continues to evaluate all those options for funding, whether it be through a farm out, as we mentioned earlier in the presentation, that's commencing, or the data room is certainly opening pretty soon, or from any other sources. This is always the case for Pantheon, and nothing has changed in that regard. Just a couple more questions. Bob, this one's for you. Jay touched upon the Hickory well being drilled just, I think, about 500 feet south of our border, spudded in the last 10 days or so by 88 Energy, testing a bunch of the targets that Pantheon has in its acreage. Bob, what should shareholders be looking for as a Pantheon shareholder in any logs or results that they publish?
Well, I think first of all, they're probably not going to be able to test this winter. So what I suspect that they will see is hydrocarbons in the Shelf Margin Deltaic and the slope fan system, possibly tagging the lower basin floor fan at a kind of a distal level, and finding hydrocarbons in that as well. Again, it's only 500 feet from our acreage, and we wish them luck.
Bob, you mentioned at a distal level. For the non-techies, what does that mean? Is it deeper, or is it in a similar sort of setting?
Some of the reservoirs are well, as a whole, the reservoirs have been buried deeper. But in terms of the lower basin floor fan, distal means possibly slightly different kind of reservoir quality than what we're seeing at sort of in the heart of the Theta West fan.
Yeah, understood. Look, a question here on upcoming news flow. I think most of these things have come out throughout the course of this conversation, actually. But while I'm here, I can probably run through them, and you can add if I've missed anything. But obviously, we'd be expecting a Netherland Sewell report on Theta West. Expecting a separate Netherland Sewell report on Alkaid. Bob Schlumberger, or SLB, should I say, completion of phase 2 of their project. Obviously, we've got the data room to look forward to. Perhaps there'll be some news from there. We don't know until that process is underway, but certainly that will be opening, and we're excited about that. The 88 Energy well that we just mentioned, Hickory, there'll certainly be some news flow concerning that over the next month. Is there anything else that I've missed, Jay or Bob?
No. Justin, I think for the immediate news flow, you've got it all.
Fantastic. Just, I think, really one or two more questions, and then we're done. The next question concerns Pantheon's profile and what we can do to increase that profile. Historically, of course, we made an effort to keep a low profile while we're prosecuting our acreage strategy, but now, of course, we have a much more secure acreage position, and a very large acreage position, and we've got an opportunity to increase that profile. Bob, can you give me your thoughts on what we can do in terms of increasing that profile to industry?
Well, probably one of the biggest events that has increased our profile has happened over the last, 2 or 3 days, which is the Wood Mac report. Wood MacKenzie has come out and said that, last year we made the 4th largest discovery in the world. That, a lot of people, read the, Wood Mac information. So that's a major change for us, to be included in the conversation of the huge accumulations that have actually been found on the North Slope. So that's a big change. The Willow approval and the moving forward of the Willow project out in the NPR again will get more eyes onto Alaska. Jay alluded to, we're going to have some independent expert reports that are done. And, again, one of the things I'd like to highlight is, when we talk about, Schlumberger and working with Schlumberger, they do a lot of their own evaluation of our data. They don't just, we don't just give them, numbers and say, crank this stuff out. And they look at it, and if they saw something wrong, they would be telling us, very quickly that this is where we don't agree with you. So getting the Schlumberger work out there, getting the independent expert who comes in and evaluating that, getting these reports out there, these different things will, certainly increase our profile over the coming months.
And Bob, I'd just like to add a couple of things. One, our discovery is onshore. So it's the largest onshore discovery in the world last year. The other ones are in deep water. Secondly, with the addition of the acreage that we were the high bidder on in last year's lease sale, we no longer have any commercial vulnerability in showing what we have to the large players. So it's a different ball game for us now, and we'll be along with SLB showing everything we have to the people that come through the data room, where we had some inability to do that in the past.
Jay, it's interesting, isn't it? I mean, just perhaps for some repetition, our current acreage position is about 153,000 acres, and the new acreage is about 40,000 acres. But even if there was zero resource associated with that, our numbers, are still so large that there's so much potential for really any company to come in and exploit. So it's a really huge opportunity we have ahead of ourselves, and our job is to increase the profile, increase obviously the stock price for shareholders, and the presence of Pantheon as a company in industry. Look, guys, I think that wraps up the questions for this presentation. A big thank you to everybody for contributing. Jay, did you have any final words as CEO that you want to pass on before we concluded?
Yeah, I just wanted to thank all the listeners, everybody that watches it live, everybody that'll watch it later, and I especially want to thank Bob, Ed, and David for their contributions, and we have an exciting time ahead of us.